Welcome to Buy, Hold, Sell. My name's Matthew Kidman and we've got two dynamic people joining us today. We've got Roger Montgomery from the Montgomery Funds and Don Williams from Platypus Asset Management. We're talking about the battered and bruised value plays that have taken it really hard recently, Don. First one I'd like you to talk about is TELSTRA. Buy, hold or sell?
A hold. And the reason we think it's a hold, there's no growth there, there's a lot of cash coming back. It makes sense to own TELSTRA just for the dividend. So if you own it, there's not a lot of sense in selling it, especially if you've owned it for some time.
So a bit of a bond proxy. Do you agree, Rog?
A hold at best. Its price is justified only by its dividend yield, and if interest rates start going up, you want to be dancing very close to the door.
All right, let's switch to food. WOOLWORTHS. It's fallen quite a lot recently.
Yeah, it's fallen for a number of reasons. It's fallen because there's fears over its Masters project taking longer than expected, and it will. There's fears about Aldi and Costco. This is a business that's arguably trading at less than our estimate of its intrinsic value, but it's never going to be exciting by virtue of the fact that it's massive. It'll plod along, it'll add value every year, it'll go up nicely, but it'll just be a plodder. I think it's good value though.
Don?
10 years ago, Woolies basically had the entire landscape to themselves. Now you've got Coles has really got their mojo back, and you have a number of offshore players entering the Australian market. So the market structure has changed dramatically over the last decade or so, and we think Woolies are starting to underperform, and we expect that to continue. So that's a sell for us.
Okay, sticking with the W stocks, Woodside, oil and gas.
We're growth managers. There's no growth in Woodside, at least in the short term, so we think that's a sell.
No growth, Rog?
Yeah, over the last 10 years, they've generated $24 billion of cash flow from operations. They've spent that $24 billion on investments. They've then paid $6 billion in dividends, and they've borrowed money and raised capital to pay for it. And the share price is where it was in 2006, unsurprisingly. So for us, it's a sell. Okay,
let's turn to the growth proxy of the market, the silver donut, Macquarie Bank.
The silver donut, haven't had that for a while. Look, it's buoyed because they're taking money out of the businesses that generate low rates of return on equity and moving them into the high rates of return on equity. Their return on equity will go from 12% to probably 15 or 16%, but I think people think they're going to go back to the glory days of when they were earning 20% returns on equity, and they won't. They're now a bit more expensive than what we would like, so they're a sell for us.
Sell?
We own it, but we'd say Macquarie is a hold at this point. We think the business it's obviously more diversified than it ever has been, less reliant on market-facing activities, so we'd put it on a hold.
I know that you are a growth manager, but is there one beaten-up stock out there that's down and dirty in the gutter that that we could have a look at, that we could forage for?
Yeah, I think it's worth looking at Flight Centre at the moment. It's down 25% from its high, and it's been beaten up at the moment because of the Ebola scare. Travel companies have been through these things. They seem to occur every 5 to 10 years, and we think the result will be no different. It will be resolved eventually, and the share price should bounce.
How about you, Rog?
That was our pick.
Flight Centre, you can tell us why.
Well.
Go ahead.
We own Flight Centre, and we own it. We've owned it for quite a while. We do think that it's being the Ebola scare is being treated as a permanent situation, which will clearly be temporary. It might be more significant than swine flu and those other things, but nevertheless it will be temporary. People believe that as the Australian dollar goes down, that people travel less overseas, but in fact the driver of overseas travel is cheap airfares, and I think cheap airfares are here to stay.
Well, there you have it. Go short Ebola, long Flight Centre. Thank you.